Welcome to Insights. I'm going to do a quick discussion about Bitcoin here. It's not really a review. There's plenty of reviews out there that I've done lately, but I think there's another teaching moment coming here. And for people who are trading Bitcoin, probably need to understand the short-term risks. Bitcoin has been up for 68 days. This particular database point studies all the daily impulses, where it's pulling in data from other calculations to review them and to establish what the cycles are. The average cycle impulse, at least the bullish impulse, is 17 days. 68 days is nearly 4 standard or approaching 4 standard deviations in terms of the average cycle. The previous max was 50, so this one is really extended, and this is what I'm warning about. At one point in time, I thought maybe the price cycle would push to 5, because at 234 or even at the high at 282% on the impulse, an impulse that flipped on 10/9/20 at $11 and now is in the 40s. Could continue to go higher, but time is really the limiting factor. The question is how far can we push time? 4, 5 standard deviations? 3 is extremely rare, and I can say we're running out of time. And now I've said on social media that 90 to 99%, maybe even 100% are going to play too long in Bitcoin because they do not understand time. I mean, time is not as flexible as price, but it's not studied whatsoever. The computer has been studying the time impulses and is learning the average impulse, daily impulse, and it knows that we're well beyond this. So the play on a longer term basis, the primary trend, secondary trend, they look pretty good. It's just the daily is really extended. So I'm saying, and I keep reinforcing this, the play is no play, because if you fool around with this and you get caught on a piece of information or an overnight trade or something of which you're exposed with leverage, when these types of readings show up, and 68 days generates the amount of complacency. When the selling comes, it's going to be fast and furious. You could get a mini panic, a very quick decline of which most people will not be able to react to. The way the internet works, it's all self-service pump gasoline nowadays. You just don't even get onto your accounts. They'll denial of service. Too many people logging in at once, so you won't even be able to log in. So you have to understand time before the rest of the population, the majority, understands it. So this is a real warning. So apply this Bitcoin's position to other assets that are inside the matrix. Time is just as inflexible in all other markets. It's not restricted to Bitcoin. Bitcoin has volatility, and volatility should scare you, but it doesn't for most, because something that's been up since early October, there's so much complacency inside this daily impulse. Nobody will be prepared. You will be prepared now, so this is, again, a teaching moment to understand and respect the cycle of time. Until I go on and find another market that's producing these types of readings, I think soybeans is in there. So if you want to look at that one, I would respect that one as well. But this is the setup that you're looking for in all markets, and how you use time and be fearful of it. So that's a short review for Bitcoin. If you have any questions, contact me. I think things should be becoming more straightforward, and everyone's learning a little bit more with each one of these videos. Difficult to produce the charts, to have written reviews and commentary on this stuff, so bear with me. So enjoy the trading day, and until the next recording, I'll talk to you guys later.